Okay, we're live now on YouTube. So good morning, everyone. It's Friday, the 14th of March, and this is the Crypto Hour. There's quite a few things to go through this week, and then obviously prepare your questions for the question and answer session. With that pretty much like half and half. Okay, I'll talk, and please interrupt me if you want to ask something while I'm presenting. Just unmute yourself and ask, or write it in the chat if you don't want to interrupt. Whatever. Let me start sharing straight away. Okay. Now, very quickly, I'll go through this. I said these economic conditions that we are in just now. Actually, let me just first of all start with the calendar. Okay, so what we had this week. Let me go back to next week. Okay, so what we had this week, it was fairly light in terms of announcements. We had inflation figures in the US, both CPI, consumer price inflation, producer price inflation. Both of them were on the low side, lower than expected. So especially the CPI is trending towards the target rate of 2 to 2.5%. And so it's only at the moment yearly reading is now 2.8%. And the PPI as well is, do we have yearly figures here on PPI? Let me just look at it on, when was that? Was that yesterday? Sorry, let me just look at here. Year on year, at the moment, we've gone from 3.7% the month before to 3.2%, lower than the expected 3.3%. And the other thing as well, as you can see, the jobless figures are kind of like ticking over. We've gone kind of like above the 200,000 as an average. And where are we? The continuous jobless claims now we're still hovering between 1.8 and 2 million. At the moment, we're standing at 1.87 million unemployed. Unemployment figures have just slightly ticked higher at 4.1%. Okay. Other things to note is that the mortgage rates are now slowly coming down. Remember a while ago we were above 7%. Now we're standing at the 30-year mortgage now 6.65, which is still historically quite a high figure compared to what we had in the past 15 years. And remember that, when you talk about, what's it like for the businesses in the US, for the consumers, the US has taken a lot longer to feel the effect of the raise in interest rates because most people are on a very long-term rate, duration mortgage, like a 30-year, where in Europe and in many other countries, it's more floating rates are used a lot more. So the effect of raising interest rates is felt straight away. In the US, instead, it takes time. But every year, just remember, there are a lot of these people now, they are refinancing. The people that are refinancing their mortgage that 10, 15 years, 20 years ago, they had about 1-2%. They now have to refinance at these rates. Okay, so pain, it's every month is felt a little bit more. So how would that then translates into the US economy? People have less money to spend because they're spending more on their loans. Okay, so they have less disposable income than to buy goods, which are what the companies on the S&P 500 sell them, and if the people have got less money to spend, it means the companies are making less profits, at least from the US. You know, they might do from other parts of the world, but it has all these things have an effect, you know, because if you take money from people's pockets, they have less money to spend on the things that they want to buy. So we had so US inflation coming down towards target rates. Canada lowered interest rates again from 3 to 2.75%, so by 1/4%, and then nothing else apart from GDP figures in the UK, which again is gone negative now. Apparently this month to month, so we come down. Let me just see if I got quarterly figures as well on here. Go back to today. So year on year in the UK, you know, again the growth keeps being notched down now. Where it was expected to be like 1.5% over just a month ago, now this is being revised down to 1%. Okay, so we then see there is also all this, then the adjustments in, you know, in the forex markets, probably that where the pound will have repriced as a result of these slightly. So anything else from today? Not much. There's let's say consumer sentiment later on in the US, but you know, nothing major. Next week instead, let's have a look. Next week, you know, we have inflation figures from Canada, you know, not that relevant unless you are into the Canadian dollar or investing in Canadian stocks. Retail sales in the US on Monday, and then on Wednesday, we have on the same date both the Bank of Japan and the Fed, you know, announcing the policy rate. Okay, so at the moment, the expectation is for both the Japanese central bank and the US central bank to keep the rates the same, but we could see a double whammy, which could be that the US lowers interest rates and the Japan raises interest rates. So that could be happening. So at the moment, why it's interesting to see what the market expects. So this central column here is the forecast. So the market expectation. That is it's interesting to see, because also it's interesting to see where the opportunities lie. Now, is there a chance, for example, or the federal funds rate being increased? Absolutely not. But there is a chance of them being lowered from the US. And the same thing for Japan. Is there a chance of them being decreased? Not very likely, but there is a chance of interest rate being increased. So if we look at that, what's the obvious thing that you look at? Obviously, it's, you know, US, Japan, you know, on Wednesday, if you are trading the dollar against the yen, you may want to be careful. Okay, and it'd be interesting to see what happens, because some of these possibilities will be priced in before the announcement. Okay, and one announcement happens probably early in the morning during the Japanese business hours. One announcements come towards the end, you know, middle of the US day, which, you know, this is 18 minus 4. This will be like 2 p.m. in the US. So yeah, interesting week. Also, we have the UK. So we have the same week. We have Japan. We have the US dollar, and we have the UK, and then, you know, and Switzerland. Okay, so big week next week in terms of international price adjustments. Again, the UK is expected to keep the same interest rates. Switzerland is expected to lower it again. You know, and the funny thing is that Switzerland is the one that lowered the interest rates more aggressively. So what happened to the Swiss franc? Let's have a look at let's do a couple of things. So this is the dollar index. Okay, let me just remove some of these drawings. Okay, and remove this as well, these moving averages that we don't want on the chart. So this is the dollar index. Let me just do it in a few more, just to make it more fun. Okay, dollar index, and this is the, I'll do it all on I'll do it all in futures so we can see more clearly. Okay, so we got the dollar index, the Japanese yen futures, the euro futures, and the Swiss franc futures. Okay, so these are all like weekly charts. Let me just remove these as well. So from, you can see in 2025, although the Swiss franc now has the lower interest rates of anybody, you can see the franc zooming back up quite quickly, and also to be considered that these levels here are the highest that the franc has ever been. So this is an all-time high reached in 2023 and again in September of last year. Okay, so if you look at the pairings of the franc, Swiss franc against pretty much any other countries, any other currencies, they are towards the kind of like all-time high against these other currencies. So it's not just how much interest you can get by buying those currencies. It's also how the economy is faring and how this balance of power is readjusting. So we can see as well the euro has been pummeled during the pandemic until the end of 2022, and again it was just towards the end of this year as well, it dropped quite considerably from 113 to 102, and now it's recovering. You can see the dollar as well, that's hitting to a level of supply, because it's almost like it was close to a pretty much an all-time multi-year high. So levels dollar in 2022, which levels that it last saw in the early 2000s. Okay, so it's, as you can see, it is now readjusting, just moving back to the mean. You can see here between the mean and list of what is being post-pandemic. Okay, between 2020 and 2025, the range, and this is the dollar index is value of the dollar against the basket of currencies. So it's been ranging between, let's say, roughly 99 and 106, 107. Now it's come down to 104, and you can see then the yen is the opposite picture. Okay, so the yen had gone to like all-time lows against the dollar. So these are all the futures are the trading of these currency against the dollar. Okay, so the Swiss franc against the dollar, the euro against the dollar, the yen against the dollar. Okay, so the yen in particular, it's stronger. It was noticed more than anywhere else, because you can see when it started dropping was at the end of 2020, beginning of 2021. Can any of you think of what happened around that time? This is past pandemic, okay? So the pandemic happened in March. So we were in the middle of the pandemic, but what in particular happened beginning of 2021? Anybody? No? Short memories, eh? Short memories. So this is when interest rates started going up. Okay. So what is the one of the easiest free money strategies? You sell a currency because that has low interest rates, Japanese yen, you buy a currency that's got higher interest rates. The differential in interest gets paid to you every day in your account. Okay, so this is called the carry trade. Okay, so it's and it's simple as that. So it's the difference between, the interest rates that you pay when you borrow in yen. Okay, so you pay the interest rate to the bank in yen. Okay, and you get paid for the currency then that you hold, that you buy, because with the yen you use it to buy dollars, and then you get the interest rate from the dollars. As the interest rate was growing, can you see, as this is paid really well, it went on pretty much for 4 years. Now, what's happened is that the US has just about started to lower interest rates, and the Bank of Japan has started raising interest rates in the yen. Okay, so that balance is changing, and this is why we're seeing, that the yen has started growing now, as kind of like rejected the all-time low and it started climbing back up, because to reflect that difference, because this is all like, it's quite complicated calculation, but it's from mostly is Japanese investors that invest in this trade, because for them, they can get more money by selling the yen, buying US treasuries, and at the same time protecting themselves against the exchange rate change by hedging. They can get more than investing in Japanese bonds. So if that difference, what you can get from the US minus what they need to pay to insure themselves against the change in exchange rate, it's more than what they can get from the bond. They carry on piling on and buying more US dollars. When that changes, then it becomes unprofitable anymore. So they sell all the US dollars and they buy back yen and invest in yen bonds. Okay, so any questions? Any of this? Anything else you want to look at, by the way, in terms of, while we're looking at charts, in terms of assets? No? Okay. Let me move out of this. So we already talked about this in the previous session an hour ago, but I'll just quickly go through it. So this chart is the wage growth over time. So it starts in 2005 and up to the current day. Now, as you can see, it comes in the news saying, okay, the wage growth is slowing down, the kind of unemployment rate is going up, almost like and we've been kind of like talking about this and expecting it for a while. But at the same time, it's not all doom and gloom right now. So we've simply gone back to as you can see, the average that we had between 2010 roughly and 2020. And roughly we are at the levels that we had in 2016 here, after the Chinese slowdown happened. So at that time, the growth in the economy was 1.6%. So at that level, there's no reason at the moment for the markets to have a large correction that we're seeing right now, if there weren't other things in play. So the other things in play, as we already discussed, is this. Like, these are the reason why people bought US stock, and why the US stock is so overpriced compared to stocks in other parts of the world. That US companies that are seen as delivering stable and high quality earning. The policy mix from the US was super friendly. Like the Fed was always very accommodating, always pro growth, favoring growth, and a situation of low inflation, also by the president. And also it is seen as the only option. Like, there was no real alternative, because anything else was performing much worse than this. So what Trump is trying to do now is trying to cut public spending, raise money, and bring down interest rates to then ideally to fund tax cuts in the second part of the year. One of the things that he said as well is just like he wants to cut taxes from anybody that earns less than 125,000 or something like this. So that they don't pay absolutely any tax whatsoever. So only the kind of the very rich people who pay tax, which is, to be honest with you, is, although I don't know if it's achievable right at the moment, it's simply the situation that we were in at the beginning of the last century, beginning in the 1900s, before when income tax was introduced. It was only about 3% of the population that paid it. So it's not like as crazy as it sounds, because we've grown up expecting it in a way. But potentially going forward, if we were to go back into like a gold-based economy, a gold standard, this could become the reality once again. But it's far away from where we are right now. So these policies that Trump is trying to impose are going against all these three conditions that people had for investing in the US. So first of all, the policies are negative for business. So eliminating that kind of like vision of the US as stable earnings growth. And as we've been seeing that, we've been talking about this over the last year, although the Nasdaq and the S&P kept doing new highs, the earning growth kept going down. Okay, up to pretty much was non-existent towards the end of last year. Also, these policies add uncertainty, which is the opposite of what this kind of like a good position as a friendly mix of policy making was. And now alternative offers, as alternatives, now Europe offers a real alternative as an investment ecosystem that wasn't really there a few years ago. Now, going into crypto. Why am I saying this? Sorry. Why am I saying this stuff? Okay. What's happened here? Sorry, I'm trying to I'm trying to resize this. It's gone like all small all of a sudden. Okay, so going back into talking about crypto now. Now, although I say crypto price has gone down over the past weeks, the big holders of Bitcoin, the ones that hold between 1 and 10,000 Bitcoins in their wallet, have actually accumulated more Bitcoin. So this will be, again, driving us through what they call a Bitcoin supply shock as well in the market, because the quantity of Bitcoin on exchanges is at historically low levels. And as we can see, as an indication of what the big buyers are doing right now, these are the ones that, in a way, with their holdings, will determine the kind of like resistance levels for Bitcoin, because we've seen very clearly that every time the price has approached 80,000, even if it's gone slightly below, there's been like a strong buying pressure following that has pushed the price back above the 80,000 level. So it means that at this kind of price, the large holders are seeing it as a bargain to buy, and they're accumulating new positions. Now, another thing that's really interesting that I wanted to share with you guys, this is the stablecoin market cap all over, including all stablecoins available in the market. As you can see there, both the fiat-backed stablecoins, crypto-backed, algorithmic stablecoin, which are still, tiny, and the commodity-backed stablecoins. Now, we're going to, 235 235 billion right now. And the fact that this number is increasing again, it's a positive for crypto, because this is the way at the moment, still the imperfect way, so to speak, that money is transferred from the fiat world to the crypto world. Okay, it needs to be into stable coins first, and then from stable coins it gets invested in crypto. So it's as the chairman of the ex-chairman of Binance, CZ, said, is that, like, stable coins now, all coins later. Okay, so they need to be in crypto investable assets first, to then translate into other things. So again, these are all like little things that we're seeing, kind of like why, even on the face of crypto prices going down, why are we still talking about this positively? Is because we're into phase where cryptocurrencies are being embedded as a normalized asset that anybody can buy, that the pension funds can buy, that central banks can hold in the reserves and so on, is now making its way as a main player in the investment world. And this is another one, just a little bit of fun. But the news. So this is like the first of bits of news that I want to talk to you about for this week. So the first one is it's been like a Trump pro crypto announcement. Okay, so he wanted to establish the Bitcoin strategic reserve, and also talking about a digital asset stockpile from US based tokens. So, and these are, by market cap, these are US based tokens. Okay, so if you take away USDC, which is not basically an investable asset, but all the others are US based tokens that you're talking about. In particular, I was talking about XRP, Solana, ADA as part of these, like strategic, and Ethereum as well. This is what he said in this digital asset stockpile. Now, how he's going to accumulate this remains to be seen, because at the moment he's just talking about, taxpayer neutral ways of accumulating Bitcoin. So at the moment, the only thing that they can do this with is by confiscating the proceeds of crime, and the US already holds about 200,000 Bitcoins in their coffers. So they are saying basically they don't want to sell these, they want to keep them, and also accumulate a digital asset stockpile of these other coins. So we'll see what happens. The second news of the week was the legislative momentum. So now Bitcoin Act has been reintroduced by Senator Loomis, and is making its way through both the Senate and the House of Representatives. So again, although Trump does the talking, the reality is that this is the responsibility of the legislative powers. Okay, so the Senate and the House of Representatives they will need to pass the laws to make the strategic Bitcoin reserve a reality. Okay, and this is started moving through the House. So we'll see what it looks like when it comes out the other end, if it's comes into being or not. But definitely is moving. Third bit of news is now it looks like the SEC might be dropping its case against XRP. So again, it's something that's been hanging not just on XRP but on the crypto world over the past 4 years.
Luca,
yeah.
Did you want to change to a different screen? We're still on.
No, it's fine. I'm just chatting at the moment.
Yeah, you're right. Okay.
I'm just chatting, but yes, I can show you something else. But so this is the third bit of news. Let's see, I can put something else so you don't get bored. Other and some of the things that are, you can see these on articles like Senator Loomis is talking about the US buying 1 million Bitcoin over 5 years. Okay, so that's one of the things that they introduced the legislation to introduce a strategic reserve and also to try and report this in a objective way. But so this Bitcoin reserve will be also to tackle the debt crisis that we were talking about earlier on. Okay, so you see, Bitcoin is not simply a technological opportunity, but national imperative for America's continuous financial leadership in the 21st century. How things have changed in 4 years. Okay, so the fact that this is coming from the ruling party, it's showing you how far cryptocurrency has come over the past few years. So when I started doing this a few years ago, it was very hard to find anything in the news that talked about cryptocurrency whatsoever. Now you get the President of the United States, the senators and House of Representatives that talks about openly about cryptocurrency being something to be proud of. So we transforming the present vision, we can ensure that our nation will harness the full potential of digital innovation to address our national debt. So basically, we pass in the back so that somebody else can pay our debt, not ourselves, while maintaining our competitive edge in the global economy. Together, we are not just adopting the future, we are actively shaping it, writing the next chapter in America's proud history of financial innovation and securing lasting prosperity for all our citizens. Okay, these are just words, but if this comes to pass and there is a strategic reserve being introduced, then we are talking about one player actively trying to acquire about 5% of the Bitcoin supply. Okay, so that would be like 1 million coin. So this is the plan of basically purchasing 200,000 Bitcoin every year for 5 years. Okay, if that happens, would have a massive effect on the price of Bitcoin. So he was saying, report from VanEck, which is one of the ETF's fund managers, 115 billion, estimates that if the US accumulates 1 million Bitcoin and holds them until 2049, the reserves could be worth 42.4 trillion. Okay, so 1 million Bitcoin. Now, multiply that by 20. Okay, so this is what could happen. Looking forward 25 years, they are talking about, this report is not me. Okay, so this report is saying basically that Bitcoin could be worth almost $1 quadrillion. Okay, that means that from where we are right now, we're about 2 trillion. To get to 1,000, just do your numbers, do your math. Okay. So on all of that, the other two bits of news that we've had, I don't know if I've got an article for that. CryptoPoint, no, not really. We've had ARK Invest, which again is one of the managers of the ETF, is investing buying more Bitcoin, and Mt. Gox on the other side is releasing some of the Bitcoin that has been holding for about 10 years, and these Bitcoins now will be found their way into the market. There's about like $1 billion worth. That could be also a representative of some of the selling push as well. On a positive news as well, Japan cut crypto tax to 20%, making potentially as trying to make Japan into a positive crypto hub. And there are news that Russia is also using crypto to sell oil to China and India, going around the sanctions that have been in place against the selling anybody buying oil from them. So with all these positive news, then why do we have what we've, why are we now dropped from 95,000 at the end of February to below 80,000, and at the moment we're standing at 82,007. So there is definitely been a lot of selling pressure, especially here from the end of February. But not surprisingly, we hit into a level of demand here around the as what I've told you before. Like if we break this previous level at about 85,000, the next stop will be around 77, and this is exactly where you can see the way the whales think. This doesn't happen by chance. So they know exactly where they're going to put their buy orders. Okay, and it's just following simple principles of supply and demand, but they got the patience to wait, because they're playing the long game. They're not playing the short game to make money tomorrow. But they just want to accumulate. So they sell what their strategy is, that every time Bitcoin makes a new high, they will then monetize, sell some of their Bitcoin, and then they buy it back lower, and there is a correction. I mean, having said this, that correction is not that unusual, and it's not that particularly sizable. So if we see here, during this cycle, so from the end of 2022, we've had already, this was 25%, 22%, 33%, and now we are this current correction is 30%. So it doesn't mean that simply because we are corrected 30% that we come at the end of the cycle. And again, you can look back as far as you want, but you can look in previous cycles and see the kind of corrections that we had. Oh, sorry. Let me just eliminate that. So if we see, this is from the last one, for example, without looking too far back. Okay, I'll ignore this, the pandemic correction. I'll just go to this one was the what we saw, like the kind of like the end, towards the end of the bear market, which is where we had this drop. We might not have been that pronounced if we hadn't gone into a pandemic. But even here, when we started growing, you can see there have been quite a few corrections. Don't look that particularly big, but in percentage terms, they're still sizable. So we got 20% here. You know, 17% there. %31% until we get to the kind of the bigger ones. The first attempt at the all-time high here. So 27%, and then there was we went back trying to make a new high, couldn't do it. 53%, and this is before we eventually made a new high. Okay, so you see all the correction they have happened during the bull cycle, and another 25% there before we eventually hit the high, and then we went through the bear market. So beginning of the end of 2021, roughly to the end of 2022. Okay, so we've had 1, 2, 3, 4, 5, 6 corrections of 20%. Probably should count this one as well. Okay, another 20, whatever, 22, 20, no, more than that. I can get to 26%. Look at this. 31, 26, 27, 53, 24. And then we reach the new high. So quite significant corrections there. So this is nothing unusual in Bitcoin terms. Do I believe that we reached the end of the bull cycle? Absolutely not. For all the reasons that I was telling you before. So the price action at the moment does not reflect all the news, all the things that we read in the news, all the acceptance and investment that's going into, at the very least, Bitcoin. Even if you don't consider any other coin, at the very least, Bitcoin, it still hasn't really shown up in terms of price growth. Okay, and remember that these are we're reacting at the moment to this demand zone. The next demand zone, if we were to break this, is the one that includes the previous all-time high from 2021. Okay, can you see here? Which is pretty much where this previous move lent before then pushing forward to a new all-time high. We're going and breaking the 100,000 mark the first time. So for me, we're still well into play in terms of growth. It's been kind of like a different move than any of the previous moves that we've been used to, because now this has become a more mature asset, and there have been a lot more players, especially institutional players. But when Bitcoin is doing this, we still had quite a way to go in terms of altcoins. Okay, so you can see, not only are we far away from the previous all-time high that we haven't touched yet, but we have retraced by pretty much like over 50% just this year. %55. Okay, there's been a retracement of 55% in the market. It was, to be honest with you, unexpected. At the moment, we stand at about 50% drop from December. Okay, so it's been like a sizable, painful drop, to witness, and it's not justified. And we can see many of the seasoned players in the crypto world. I'm not talking about YouTubers here. I'm talking about real people. They are making the investments, like for example, the chairmen of Binance, like founders of Ethereum, Binance, Cardano, Polkadot, other big environments. They are saying basically the prices do not reflect the kind of increased activity that we had in all these chains compared to 2021, and we haven't even touched. So at the moment, we still lagging quite away from. Let me see if I can do this. So to get back to the all-time high at the moment, the altcoins would need to grow 120% from current moment. Okay, so there's still a long way to go, and I don't although this is painful to see at the moment, we're still in a long-term in a moment of long-term growth. So if we look at the trend so far, you can see we're still in a normal retracement. I mean, to go down and to interrupt this I would say this uptrend, we will need to drop below this point here, so an extra 30% drop. Okay, and that will have to be almost like a 2/3 drop from December's high to interrupt the uptrend. So I would be at the moment, I mean, what I am looking at, there is an interesting AI summit next week that could push a lot of the AI tokens forward next week, and also we have the interest rate decision in the US, in Japan, in the UK next, and Switzerland next week. So we could be looking forward to maybe a catalyst that can push some money back into the crypto market, that can take us back towards restarting the next impulsion phase. So the next move, if it starts now and moves above that, then that would be the move that may create a new all-time high for all coins. Okay, remember this chart is the one that includes all coins apart from the top 10. Okay, and the maximum they reached in 2021 was about $500 billion at the height of the bull market in 2021. Okay, so we come to the last 10-15 minutes. So let me stop chatting and let's see if there are any questions. No questions in the chat box. What about anybody who wants to unmute themselves and ask a question? Eric, please go ahead.
You're saying next week could be a start with all the interest changes, that more money flows into the crypto market, that the crypto could pick up. Is that what you're saying?
It could be, yes. So if the interest rates are lowered, that basically means the easing the monetary policy. So just think about it on an individual basis. If you have a mortgage that is linked to the central bank interest rate, and the interest rate gets lowered, that means that you pay less in your interest payments. So that means that you have then more money available to buy whatever you like. Now, obviously, not all the money will be invested, but some of it will. So this is simply, it increases the amount of disposable income, for people and businesses to use. So people to buy not just crypto, buy goods from companies, and so the economic activity increases when interest rates are lower. Okay, and some of this money may find its way into crypto projects.
Thank you.
So no problem. Any other questions? No? If you don't have, if please use the time. If you have questions, I'll be happy to answer them. Otherwise, we might finish the session early. Actually, I wanted, Jonathan, did you want to say a couple of words on the USDA available on Cardano right now? I think that's quite a nice development, and because it was being one of the things. So going into a little more deeper into crypto, one of the criticism that have been levied at Cardano is the lack of stable coins in the ecosystem. So we had a big launch of the USDA stablecoin. So
Yeah, which has been a long time coming. So within the Cardano space, we've got the three founding entities: IOG, Cardano Foundation, and Emergo. And Emergo received some Genesis aid and they're incentivized to go out and get business relationships going and drawing that side of things. And they've been a bit slack, but last couple of years they've started to get going. And USDA was one of the big things they were trying to bring about, which was a well-funded fiat-backed stablecoin on Cardano. So we've got an algorithmic backed stablecoin called JED, and that's doing okay. And we've got a community-based fiat-backed coin, which is USDM, and that's doing well. That's like $10 million, I think, in it now. But USDA is up and running and in partnership with another organization. So they're called Ansens now, and that has that's launched now as well. So the final liquidity figures I'm not sure on, but it's positive because we've been very much, for any ecosystem to survive, you really need a asset that you can sell back into, which is the reserve currency. So when you trade in, you then sell back out when the market drops and get back in again later. So without that large pool of liquidity on Cardano, it's been difficult for people to get involved in DeFi and really like sensibly trade in and out of a stable coin. And so that's now becoming possible, which means that, it's a slow, steady progress DeFi on Cardano, but it is getting there. I think we'll be okay.
yeah, it's all like it's difficult sometimes to explain to people. There's like it's little steps. Little steps. It's not like one major thing to all of a sudden, everything jumps. It just you need to put things in place to attract projects, to attract liquidity, and maybe in a way it's with Cardano it's both a criticism and a strength, the fact that they've done things in a certain way, because they haven't jumped into things simply to attract users, which is what Ethereum have done and what Solana has done as well, just jumping into meme coins and all this. But they've done things in a scientific way. So then when I go and talk to then institutions and people that are interested then to use blockchain to do things in real world, you might have heard this word real world assets going to be the next big thing in cryptocurrency, as real assets being tokenized and again increasing their velocity. It's like probably a lot will be seen a lot better than a lot of its competitors that doing the same time. Yes, have attracted a lot of kids now to people that wanted to get rich quick. But at the same time, there have got examples in the history that large users will not like, because a kind of if you go into something like a blockchain that can be switched off, like Solana, or where 10% of the funds under management can be stolen in any 1 year, like Ethereum. Well, it's not something that you really put your financial system on. It's not the right technology to do it. So in one side, they were saying, yes, they've been slow in promoting things that will attract new users. But on the other side, they've been very, very careful about how they've done things, and they built a technology that has never always worked. It's never ever stopped, and it's been up ever since the beginning, hasn't it? And it's not something that anybody else can say, to be honest with you. Yeah.
No, very stable, very strong. Sorry, I had to jump out to pick a parcel halfway through that, but Yeah,
That's
it looks like Jed has got 23 million in liquidity. And so USDM's got 10. So we'll see where USDA comes in at, but that will help things a lot. And with the sort of shift in towards governance among the Cardano space, there's lots of stuff going on all around the place, and that's sort of the early signs of, when people start to be able to execute power as community members. That's when you start to see the real interest in the space come up, because there's opportunities there. And like we've got this $1.5 billion treasury that's built up, that's under the control of the community now. That's what governance is really about, this initial stage of it. So we need to decide how to spend that, and so people are raising their profiles. And so when you've got that sort of infrastructure, governance, and serious treasury in the hands of the community, that's a very different story to some of these other chains that have got venture capital money in, and vested interest from other investors really looking at the price and let's be honest, manipulating the markets. It's a very different proposition on Cardano, and I think we're slowly getting acknowledgement for that, which is great.
fantastic. All right, guys, I need to end the call now because I've got another call at 10. So hope you all have a fantastic weekend. Probably see a lot of you at Basecamp tonight for me, or let's see if you're in Australia, New Zealand, it'll be tomorrow morning for you guys. So have a fantastic weekend if I don't see you, and I'll see you again next week. All right.
Thank you, Luca.
Thanks, Luca.